Session of 2026. Now moving on, cigarette and tobacco stocks are under pressure after the government notified February 1st for higher levies. Nehi joins in again with the details on this.
Well, yes, cigarette stocks and tobacco-related stocks have been under immense pressure. If you take the names like ITC, Godfrey, Phillips, VST Industries, massive pullback on some of those stocks seen today. Let's understand what the reason has been behind this sharp cut that we've seen on some of these names. If you try and understand what the impact has been, first of all, ITC registered its biggest intraday loss since March 2020, and the market cap also slipped below 5 lakh crores for the first time since October of 2025. For Godfrey Phillips, it's the biggest intraday decline ever seen on the stock. Why has this happened? Let's understand what the news is. The government has notified that 1st February is going to be the date from which the additional excise duty will be levied on tobacco products and a new cess on pan masala. But let's focus on the tobacco bit first. New cess will be over and above the GST rate of 40%, and new cess will replace the compensation cess, which is the structure that is in place right now. So from what happens from the 1st of Feb is 40% tax on cigarettes, tobacco and similar products, 18% tax on BDs. On top of this, health and national security cess will be levied on pan masala, and tobacco and related products will attract the additional excise duty. This announcement has got the street spooked. What is this additional excise duty? To what extent is it? Let's understand. Earlier, or if you talk about what the structure is on present, on cigarettes, they attract a compensation cess of 5% ad valorem, plus this cess of 2,076 rupees up to 3,668 rupees per every 1,000 cigarette sticks produced by the company. Now what the norms are putting into place is this excess duty is going to be to the tune of 2,050 rupees all the way up to 8,500 rupees for every 1,000 cigarette sticks produced by the company, and that's a sharp spike on the upper end of the excise duty that the street was expecting. So now how is this excise duty calculated? It depends on the length of the cigarette stick and also the tobacco content in it. So for cigarettes other than filter cigarettes and length not exceeding 65 millimeters, it starts at 2,050 rupees, goes up to 3,600, 2,100, 4,000, 5,400 rupees for every 1,000 sticks produced, as and when the cigarette size and the length of the cigarette basically starts to increase, and this goes all the way up to 8,500 rupees per 1,000 sticks produced, and this is effective from the 1st of February. On the back of this, Jeffries has come out with a note saying that the government has notified a sharp rise in excise duty for cigarettes, and they believe that even if this NCCD, which is the National Calamity Contingent Duty, is waived off, this still could have an impact of 20% on the volumes. Otherwise, it could have a 30% impact. Now, most importantly, what they're saying is someone like an ITC, if they want to be able to withstand such a big shocker from the government, at best, at the bare minimum, they need to take a price hike of 15% and pass it on to the customers, which is a tall feat to ask for. So let's see whether or not that happens, and we are waiting to hear from some price hikes announcements from some of the cigarette players now that the excise duty that's going to be imposed on them has been increased. You also have another note coming in from Nuvama wherein they have downgraded the stock of ITC to a hold rating from a buy rating, so very negative for ITC and for other stocks in this sector as well, and that's the reason why some of these stocks were showing very, very major cuts in today's trade.
All right, with that, it's time for a quick breather. Don't go anywhere. We'll be right back. Stay tuned.